Hello everyone. Today we are going to understand how much return Power Grid InvIT has generated over the period of a time from its inception and what strategy I am following to hold this investment. For better experience, I would recommend please watch this video at 1.5x speed. So before moving ahead, I have a famous quote to discuss with you that is it's better to be roughly right than precisely wrong. Now, the topics that we are going to cover today is what are InvITs. The second would be particularly about the power grid InvIT, for which we are discussing about the returns that it has generated. On third point, we are going to discuss about its return and IRR achieved so far. And fourth would be the investment strategy that I'm following for this particular investment. Now, what are InvITs? Like REIT, InvIT is also a pool of assets, but unlike REIT, it is not the commercial properties or the hotels or the commercial shops which would be providing rental income and that would be distributed to the unit holders. Here in InvIT, the underlying assets would be infrastructure projects. These projects could be transmission lines, thermal power plant, roads, pipelines. So these also provide some sort of a revenue to the owning or the governing body. So like in road, toll is being collected and that toll forms a part as in revenue to the company. So similarly, in wheat, you get certain amount of revenue and it got distributed to the unit holders. Now, we need to keep in mind few key points about this InvIT are it is mandatory that 90% of net distributable cash flow generated throughout the operation should be distributed to the unit holders. And there is a certain cap on the exposure of assets under construction. So this poses less risk in terms of your invested amount. Now the second point is in India, InvITs are governed by SEBI. So it is something which builds a trust on such investments because there is a body which are governing and looking after on such investment vehicles for retail investors. Now, InvITs are something which I would call a hybrid between bonds and equity. These are slightly riskier as compared to bond, so it also provide much higher return, and they are slightly less riskier as compared to equity, so they have a tendency to provide less return as compared to the equity. But in case of Power Grid, we are going to discuss about their annualized growth return which they have provided in last 1 year. So I'll keep that return metrics on the later part of our discussion. So first, what is Power Grid InvIT? There are three EATs which are being traded in India. One is IRB InvIT, that is into road projects. The two are into transmission network. One that I'm going to discuss, Power Grid InvIT. The other one is India Grid Trust Transmission Network. In Power Grid InvIT, the underlying portfolio has a five assets. Namely, these are PKATL, that is Power Grid Kalam Transmission Line Network, that is in Himachal Pradesh. PJTL, Power Grid Jabalpur Transmission Line Network, that is in Jabalpur, and likewise there are three more networks as well. Now these five assets have 11 transmission line which covers almost around 3700 circuit kilometers, and they do have an optical ground wire of closely to 1000 kilometers. Now one would think what would this optical ground wire will do. Now what whenever we construct a transmission line, there is one optical ground wire nowadays being laid as in when this transmission line network is built. Now this optical ground wire is being leased to some telecommunication network through which they can transmit their telecommunication signal, and the transmission line network also generate some sort of revenue from these networks as well. So yes, around 2000 kilometer of optical ground wire network is there with this asset, and apart from that there are three substations. For every asset, more than 30 year of TSA is in place. Now TSA is a transmission service agreement. That means for next 30 years at least, these five assets would be generating, they have a license to transmit the electricity from one place to another place. And all the five assets are of Power Grid, and Power Grid is the third largest transmission company in the world. So this InvIT is backed by a sound body who has a very good track record in terms of performance in the past. Now, I would say it's a kind of a monopoly assets, because once a network is laid, government won't think of constructing any parallel network. I would say not near in next 15-20 years, because these networks are designed and the capacities has been formalized, keeping that requirement in the picture once these networks are built, because these are the complex networks. Only strengthening can be done, but that won't affect your revenue. So you can look forward for a long term stable cash flows out of these assets, because all the five assets are operational as on date. Now the return which this InvIT has generated. Now in InvIT, the first distribution need to be done within 6 months of its listing. The next subsequent distribution mandatorily need to be done in every 3 months. So the first distribution has done in November 2021, and the InvIT got listed in May 2021. So the issue price for listing was around 100 rupees. The first dividend that unit holders has received was 4.5 rupees in November 2021. In February, the second distribution was there around 3 rupees per unit, and in May 2022 again the distributors the unit holders got 3 rupees as in distribution. Now the word distribution is important here. The It is not called dividend, it is called distribution in terms of InvIT and REIT. That's why I'm reiterating on this word called distribution. So as on today, on 14 July, when I'm recording this video, the InvIT is trading at a market value of 132 rupees. Now, if we need to understand all these cash flows, like 100 rupees has become 132 rupees, that does not mean 32% of return has been generated. You need to visualize entire cash flows on an annualized metric. So to make you better understand about this thing, first we need to understand about a concept called IRR, that is called internal rate of return. Most of you might familiar with concept, but few those who are not familiar with this concept. Internal rate of return is an annualized growth rate that an investment is expected to generate, or it may have generated over a period of a time. So to make these equation or make this sentence simpler to you, I have a case. I have listed down three different cases, in fact, to make you understand. Now, if imagine in year one, in case one, if you have invested, now I have mentioned in year one, in each three cases, negative 100. That means negative means 100 rupees has been invested from your end, and in case 1 in year 2 you got 110 rupees. So the positive sign becomes that it has came back to your pocket. Now 100 rupees which has been invested, 110 has came back to you. Now that means within a frame of 1 year your 100 rupees has become 110 rupees. Now what is the IRR? It is 10%. Your money has grown by 10% within 1 year period of time. Now take a case 2. You have invested 100 rupees in year 1. For year 2 you got nothing, nil. For year 3 you got 110 rupees. Now what is the return? One cannot think 10%, because there was a delay of one additional year compared to the case 1. So your annualized growth rate is not 10% but 4.9% in this case. Now consider the case 3. Instead of getting 110 rupees deferred to some subsequent year, you have got some sort of, you would say, uh, uh, dividend or distributable unit, like we are discussing in InvIT, which was the case earlier. You have spent 100 rupees, you got 5 rupees in year 2, you got 5 rupees additionally in year 3, and in year 4 you got your 100 rupees back. Now in entire this case your annualized growth rate is 3.4%. Now the problem with IRR is it consider each cash flow equally spaced. Like if one transaction has happened, like outflow of 100 rupees has been done in one frame, in second frame it will consider there is a spacing of 1 year. Now this cannot be the particular case. You might have invested 100 rupees on the 1st January of any given year, and you have got back your 110 rupees, let's say mid of the second year. Now there is a difference of 15 months between these two dates. Now if you will calculate IRR, it will show 10%, but that is not the correct number. To understand the exact gap and to the this unevenly distributed cash flows, there is an extended concept which is called XIRR, that is extended internal rate of return. Now it captures the specific time period when the particular transaction has happened, whether it has been something which you have invested or something you have got back. So for case 1, imagine on 1st of January you have invested 100 rupees. After 6 months you have got 110 rupees. That means your annualized growth rate is 21.2%. Now consider the case 2, where you have invested 100 rupees on 1st January 2001, and on 1st January 2002 you got 110 rupees. So your X IRR become 10%. Now here the spacing has been equally. That's why your answer matches with 10% in the earlier case. So consider case 3. Here you have invested 100 rupees and you got 5 rupees in every by yearly basis, biannual basis, and on 1st July 2020, 1st July 2002 you got your 100 rupees back. Now your X IRR is 6.9%. So XIRR is a more I would say a correct factor which should be analyzed while we assess such kind of unevenly placed cash flow. So that's why in most of the bond returns or mutual fund returns, the word is XIRR, which represents more true annualized growth rate. So you should consider XIRR. These are the Excel functions that you can watch more videos upon these functions to make you more familiar about this concept. Now coming back to the question, basis the cash flows that we have discussed about Power Grid InvIT earlier, what is the XIRR or annualized growth rate that Power Grid InvIT has generated since its inception? So it is 36.75% on a pre-tax basis. No, I haven't considered the tax factor, the TDS factor here. I have done on a pre-tax basis as on 14 July 2022. Now 36.75% is much higher to the most of the mid-cap stocks that has performed over a past 1 year. Now, if you would have invested on its IPO, your return would have been around 36.75%, and it's huge. Now, coming to the holding strategy. Now, I am trying to hold this kind of investment for a mid-term basis. So for my understanding, mid-term basis is around 3 to 10 years. Why not long-term and why not short-term? Not big short-term because I am getting some attractive distributions out of this investment. Not long term because for long term I am betting on real estate or REIT more as compared to InvIT, because InvIT already trading at its full operational capacity. Now the capital appreciation might not net be great as compared to the real estate which I am thinking of. So you should think of, if you want to invest in such kind of a platform, you should consider InvIT for a midterm only, because all the underlying assets are performing its full capacity, so the capital appreciation would be less over here. And in terms of real estate or REIT, capital appreciation might be more as compared to, I would say, in wheat. So in description I have mentioned about one of the REIT which I have uh, analyzed earlier, that is Embassy REIT, and I think on a long term its capital appreciation much would be much higher as compared to this particular InvIT. I'll be posting my the link to that video in my description below, and I'll request you to kindly subscribe to my channel, and I'll be coming up with such an interesting analysis for you guys. Thank you. Take care, everyone.